The longest weekly losing streak in the last 5 years. That's what we have seen in the market this week. And it's been a continuing string of losses. The Nifty falling almost 1%. The mid-cap index underperforming. The small cap index down almost 1.5%. That's how the tally stands as we kick off this week's edition of the Editors Roundtable. Lots happening. The biggest headlines are coming in from the US, and 50% is that one number that you would have heard, or that one phrase that you would have heard over and over again. Where does this 50% tariff really leave India, the economy, and more importantly, the market? Are we close to the bottom, or is there a bigger downside opening up? Well, that's what we're going to be discussing on this week's edition of Editors Roundtable. I'm Surabhi Upadhyay. With me, as always, Nimesh Shah and Nigel D'Souza. And to help us make sense of all this tariff chaos, we have with us Ravi Dharamshi of ValueQuest Investment Advisors. Ravi, great to have you with us in our newsrooms. You've picked a great week. You know, the most newsy week I think we've seen since the 2nd of April, actually. So glad you're here.
Yeah, you know what? You said that I'll help you make sense of it. But honestly, nobody can make sense of it. And whatever is there today won't be there tomorrow. So there's no certainty to anything over here. I think clearly these are all negotiating tactics, and they want us to give in on some things. And once we do, it will settle down at a lower number. But until that happens, I think the uncertainty surrounding this whole thing is going to kill the business in the meantime.
I know, absolutely. You know, I was remembering this week in the morning, one of the days, Prashant said that if I was a betting man, and he's not, but he said if I was a betting man, I would bet that this 50% is not going to last. But last count, Mr. Trump has said that hame baat nahi karna hai. We don't want to negotiate. So
well, there is 21 days, right? So give some time. Something could come up. But you know, he's working the reverse psyche. After 25, he said another 25. Look what today Gokuldas said. He said, I'm happy with 25%. Had it been only 25 first, he would have said, I've been happy with 15%. So he's really playing with the psyche of the investors. Ki, Achha, theek hai, aur bolo, to thode kam hai. He'll get what he wants, right? So I guess even 25 is going to be very difficult. Isn't it, Ravi?
No, I think, it should be. I would expect, or rather, I would hope that it is less than 25. It should be closer to 15%.
Sure.
See, it's a relative game. We have to be better than the peers.
The peers, exactly.
And for that, we need to be better than Vietnam, China, Pakistan, Bangladesh. Those are the countries where what level they are, and we need to be better than that. So from that perspective, I would take anything more than 20% is a challenge for India, for sure.
You know, on that note, actually just allow me to quickly hop across to the wall, because I was looking at the comparative rates, where we stand, and some of the implications that are out there. Because it's, you know, this 50% on us, and by the way, it's not as if we are running the highest trade surplus with the US, not at all. Our trade surplus is around 46 billion. I mean, China is over 100. I'm not even talking about China. Let's forget China. Let's look at countries like Vietnam. Even their trade surplus with the US is much, much more. But we've gotten the raw end of the deal very, very clearly. Just want to talk about what has happened with respect to geopolitics, because that's become very important for the market. We all remember Thursday, right? The moment that news trickled in of possibly some, you know, meeting between Putin and Mr. Trump, we saw the short covering in the market.
No, so we'll get back to that piece, Surabhi, that you're going to be putting out in just a bit from now. But, you know, for the markets, what's worrying the market? The domestic economy is quite soft. Earnings are yet to pick up. And these Trump's tantrums have now turned into tariffs, you know, because earlier he was, you know, every day you woke up to something. Now, this week, actually, the direction was clear. 25% became 50%, and there's no U-turn. But I would have to bet with Prashant on that one, you know, even though I'm not a betting man. But I think in the next 20 days, there'll be some softening of stance from this 50%. That's the hope, at least. You know, from a technical perspective, what are you hoping for? The PCR has come down to 0.7 by the time we closed up today. The FI net shorts are the highest that we've seen since March 2023. And the India VIX, with a correction from around 26,000 odd all the way to around 24,500. The India VIX is still pretty much okay, well, decently behaved. You know, otherwise, you've seen the VIX shoot up to the high teens, which hasn't happened in this case. The problem is we require some kind of good news from somewhere, because that's missing, and on a day-to-day basis, the Nifty is making lower lows. You know, how would you, you know, look at this market, Ravi? You know, if a lot of retail audience out there, they're getting a little bit panicky now, because it became so easy, right? You have some bad news, you buy, it'll recover. Now you're getting follow-through on the downside. This market needs to stop falling first, then we hope for a bounce.
No, I think you summarized it very well. The positioning is very, very extreme right now. So what we need is a positive trigger. I think it's an unfortunate timing from that perspective. The economy was getting soft, and probably we are at the fag end of the softening of the economy because the steps have been taken by government as well as RBI, but those steps take time to percolate it down into the economy and into the earnings eventually. So we're probably a couple of quarters away from that, but in the meanwhile, this uncertainty has created a whole new dimension to the market, and which has caused the markets to come down. So I do believe we need clarity. It might not be the best deal for us, but at least we need clarity. We cannot afford having this linger on till the end of the year. We want clarity in the next, we need to have clarity in the next 1 month. And we need to now actually really work hard in opening up the other markets, whether it's EU or other market. And it might be so that, you know, because we had a tough deal with US, we might actually be a little lax on the other side. So one action will have its other reaction. But what we need is clarity and opening up of markets so that we can get on with business as usual. And the steps taken by RBI should eventually result into economy picking up by the end of the year, is what I feel.
Ravi, you know, the one big support for the Indian market was the retail money. But, you know, now it's not about 1 day, 1 week or 1 month, 3 months, 6 months, almost a year now, we're coming to a negative return or a flat return. Is that a bit of a risk now that the domestic liquidity will, you know, somewhere find it fatigued and there could be a bit of loss of momentum from that side? Are you getting that sense yet, talking to a lot of...
There is clearly a loss of momentum.
Yeah.
I won't say that... See, we are not going back to the old ways where there will be complete stoppage of SIPs or retail money will not flow in. Yeah, maybe the chunky money might not come in at this point of time. They are more going to be opportunistic. So if they see market performing, they'll come back. But the more sticky one, I think there will be a base at some point of time and it should support. And even the foreign money for that matter, I think we are at a 15-year low in terms of the equity holding. I do not believe that they are going to, you know, sell off 2-3% of the equity or something of their holding over here. So technically it looks like we are at a very, very extreme positioning in the market. But we need a fundamental positive trigger for us to start moving up. Valuations have become reasonable as compared to the other markets because we have seen Europe, you know, some Asian markets also perform. We used to quote a 2 standard deviation premium to the other markets. Now it is more closer to the long-term average than it has been in the last 5 years.
So at least, I mean, from that perspective, that's a silver lining, that at least we're not
valuations are far more palatable in comparison to what it was.
What it was about a year back, absolutely. Specifically on pharma, Ravi, and you've obviously done so much work over the last many years on this, right? And again, it's a big question mark. We don't know. He's going to raise tariffs, but he said he'll do it gradually. Eventually, he's saying 250%, but we'll see. Should investors be worried if they have a lot of exposure to pharma?
So, see, first of all, let's understand what US's problem is. They want to bring their costs down in general. It's an economy that has been propped up by debt, and all that debt, healthcare forms 15% of the GDP, and it is growing at double the cost, double the rate at which GDP is growing. So, it's healthcare costs, they absolutely need to bring it down. Of course, drugs is a very small part of it, but still, even that will hurt, and that will hurt directly the consumer. So, India and China are the source of cheap drugs for US, and if they do not, if they put this kind of tariff, it is eventually the US consumer that is going to suffer. Yes, there might be some hit that the manufacturers over here will have to take. And if you're talking about these steps leading to supply chains moving, it's not going to happen overnight. It will take 10-20 years. So in the meanwhile, you'll end up hurting your own economy. So I don't think it's a permanent shift that is going to happen. But incrementally, everybody will say, I'm putting up one new plant. Like Apple said, I'm going to invest over this much. They'll show their intent. And of course, then it will depend on in the next election what happens. They are not going to commit or spend their entire amount right now. But yes, in the meantime, in the short run, it will create uncertainty and it will lead to uncompetitiveness on the part of Indian manufacturer vis-a-vis other countries. That remains a challenge.
But you don't see an earnings threat or a fear or any sort of further downgrading?
See, the bigger problem in the pharma is the approvals, right? I mean, if they want to buy from somewhere else, there should be a source available from where they can procure it.
Sure.
If that drug is not available anywhere, they will.
What
will
they
do? They have to buy it from
the tariff will be passed on.
It will be passed on, and they will. So it will boil down to how strong the competitive advantage of that particular company is in that particular product, and that will determine their ability to pass on the cost. At a country level, India's strength is very good in pharma, especially in the API and the formulation space. So I do not foresee any country taking away any significant market share. And China also, as I understand, at this point of time, at least it's still comparatively disadvantaged only in terms of tariffs. So I don't see a major shift. It's just probably inflationary for the US healthcare cost.
Correct. Ravi, a couple of sectors I want to ask you. And the first is on EMS. We saw a big accident today in terms of PG sharply cutting down the guidance. I'll just run through the valuations as well. Dixon is still trading at 58 times, Keynes is at 56 times, Evlon is trading at 42 times, Amber is trading at 46 times. You played this theme very nicely in the last couple of years. Stocks are up 8, 10, 15x as well. At these valuations, kind of challenges which are coming across, what's your take on the EMS space? A buy or a avoid?
So we are completely out of this space.
Achha, okay.
It's been a while since we are out of this space. Stocks have done very well after that also.
Okay.
But as you rightly mentioned, number one, the multiples are not favorable.
Sure.
See, when you are looking at the multiples, two things to keep in mind. An absolute 45 times or something might not mean expensive or cheap.
Agreed.
But in comparison with the growth, in comparison the stage of the cycle, you have to see where the multiples are. So if these companies continue to grow at 40-50%, those valuations might sustain. But if they are not going to grow, clearly there is a problem. And I do feel that at this stage, if you are entering, then you carry that risk. Sure. That if there is like what happened in the case of a company.
What was the trigger for you guys to sell it out?
I could not justify. See, for me, it's always easy. If I cannot justify a doubler in 3 to 5 years time frame, then I'm carrying more risk than reward in my portfolio.
Sure.
So the idea is that it was a stage at which stocks had run up. They were factoring in 3 years forward in terms of valuations. You can give it a little bit longer rope when it's a nascent industry. But now it is a well-recognized industry. Everybody, a lot of money has flown into it. Sure. Making money from the next 2-3 years point of view, I feel is going to be a challenge in this space.
Is that going to be the case with the defense stocks as well? Again, a lot of big momentum has seen. We've seen big rallies, but the numbers are not coming
mostly
up.
horrible Q1 numbers.
Exactly.
So most of them.
That is a bit of seasonality in defense, but still, from a medium-term perspective, you think most of the good news is price change rally is done with in the defense space?
I am pretty much out of the defense stocks also. Okay. But however, I do feel the problem in defense valuations is to a lesser extent as compared to the EMS space. And that business is far more defensible than the EMS. Okay. See, over here, one customer going here, there can make a big difference in electronic manufacturing. But in defense, in today, there are virtual monopolies. There is only one guy to whom orders for frigates are going to go or light combat aircraft. There are only few guys who manufacture this. So the entry barriers as well as the exit barriers are quite high. So it is probably, over there, I feel it will be the price correction can be to a lesser extent, or there can be a time correction. Yeah. But these electronic manufacturing companies definitely are, there could be landmines over there.
All right. Ravi, I wanted to ask you about the renewable space. And solar as a theme is something that you're like, right? There's solar cells, modules player, solar pumps as well. Those are a couple of segments that you're like. Tell us the rationale out there, because the street is divided out there as well. You have a very, very bearish view that's coming in there, and you have a very bullish view. Some believe that it's run its course. You believe there's further potential?
See, I don't think it's run its course. It was only in April 24
I'll ask you in a simpler way. You spoke about two sectors you've completely exited.
Yeah.
The third sector, which he asked you, you're very bullish on. Are you still holding on?
Absolutely.
Perfect. So that's an answer that you're still bullish on.
Yeah. So
now explain
the simple answer is yes. Of course, we are holding on.
Yes.
The reason I believe we were still at the beginning of the cycle. It was only in April 24 that ALMM got introduced, which is that you can buy only from this list. Now government is coming on with ALMM 2, which is essentially the cell manufacturing part of it, and eventually they will go to wafer and polysilicon as well. So the idea of government is to ensure that these companies make money so that they can backward integrate, and we finally have our own supply chain which can stand up to China someday. So that being the hope, I don't think these tariff and non-tariff protections are going away tomorrow. They are here for at least 3-5 years. So from that perspective, you should not be so worried. Yes, theoretically, if they were to go away tomorrow, there is a risk to the business model. But if you think of it, the energy independence and energy security are two big strategic reasons why we should not, open this sector up. Okay. And from that perspective, I think it is well protected. Okay, so renewables gets a thumbs up from Ravi. We'll find out which are the other sectors that he's bullish on. That after a very quick break.